Okay, so for this video, I wanted to cover the rules surrounding when a dependent child needs to file their own Form 1040 tax return. And then we'll also talk about if they file their own return, how does that impact the parents when they file their return. So the fact pattern we've kind of got posed to us today, which is the most common one, is if you have a dependent child that's working during the year, so let's say they have a summer job and they earn a W-2, do they need to file their own tax return? And really it's going to depend upon two factors, right? So the first one is, what is the total amount of earned income that that child has during the year? So look at their W-2 wages and see what that amount is versus what the standard deduction will be for the child. The second piece is, what is the total amount of unearned income that the dependent child has during the year? So unearned income are things like dividends, interest, capital gains. And so this most often arises when parents set up accounts for their kids to save for, let's say, college or something like that. It's in the kid's name, it's earning interest, maybe it's a brokerage account, so they've got some dividends in there. That income is attributed to the child, it's in their name, their social security number, and so they need to track how much unearned income they have, because that is also going to drive whether they need to file the 1040. Now, a dependent is always allowed to file their own personal return. Okay, so in the dependent, if they file their own return, even if they're 4 years old, you as the parent can still claim them as a dependent, right? So just because they file their own return doesn't mean you lose out on that dependency claim, which is important because you as the parent are likely going to want to claim them as a dependent so you can get things like the child tax credit. Now, if they are your dependent and they are filing their own return, when they file their own 1040, there is a box on the form where you can check that the Form 1040, the child dependent, is being claimed as a dependent on another return. And the reason why that is so important is because that will change the amount of standard deduction that the child is eligible to take, right? And that's okay. Now, let's talk about the filing threshold. So a dependent has to file a 1040 if their earned income is more than $12,550 for the year, or their unearned income is more than $1,100 for the year. Now, the reason why this is the standard deduction for the unearned income, right, $12,550, and this is the standard if the child just has unearned income. It's $1,100, much lower. And the reason for that is because this is where the kiddie tax comes into play. So that's beyond the scope of this video. I'll put a link below if you want to check out the 8615 on how that's calculated, because it's much more complicated. But effectively, the kiddie tax is designed to try to prevent parents from shifting assets to their kids so they can earn investment income at the kids' marginal tax rate, which will be lower than the parents. Okay, so that's kind of the long and the short of that one. Now let's talk about an example where a filing isn't required, but maybe they want to do it anyway. So we have Jane here. She's 16 and she worked the summer at a restaurant waiting tables. Her W-2 for the year shows $8,200 in wages, and she had $300 in federal income tax withheld. Now, because her gross wages are under that $12,550 mark, she's not required to file, right? However, if we look at her W-2 and we see that we have $300 in federal income tax withheld, then we would recommend filing because you can likely get that money back, right? So if she did file a return, her taxable income would be zeroed out because the $8,200 would be surpassed by the $12,550 in standard deduction, right? So she's going to get a full refund of the $300 in taxes. Now, of course, like I noted before, her parents can still claim her as a dependent, right? And so the parents can claim her as a dependent, they get their child tax credits, and so overall you get the greatest yield here for your overall tax refund for the family, right? So it's good. Now let's talk about an example of a filing where it's absolutely required, right? So we have Mark here, he's 17, and he works as a receptionist at the local gym, right? And he works throughout the year, right? So he's not just a summer job, he works nights and weekends after school. So he still lives at home and he's a dependent of his parents, right? So they're still eligible to claim him as a dependent. Now his W-2 for the year is $14,900, right? And so it's above that threshold, right? The $12,550. And then in addition to that, he has a savings account which he's been putting money into that pays him $5 in interest during the year. So even though Mark's a dependent, he is going to be required to file his own 1040. And that's because his gross earned income exceeds that standard deduction for the 2021 tax year. So Mark would report this income, he would report the interest income. His effective tax is going to be really low. So he, again, like Jane up here, whatever amount of federal withholding was applied to his paychecks, he likely is going to get a refund too. So in this case, he's got to file, and the upside is he'll probably get a refund from his, from the taxes withheld also. So that covers it for the earned income for teenagers in these summer jobs. Like I said, if you have children that have a lot of unearned income, take a look at this video covering the kiddie tax. Very important that's done correctly, and that's one where it is much more complicated because it involves looking at both the parents' return and the kids' returns at the same time. So again, a little more involved than these kind of examples here, but either way, I hope that was helpful. If you have any questions, leave me a comment below, and I look forward to seeing you again on the next video. Thank you.